Hi, everyone. I'm Chelsea Newton with Sparrow Financial. Thank you all for joining us this afternoon. Today's session is being recorded, and so I just want to remind you to make sure that your microphones are muted. I'm excited to have some guests with us today. First, I'm going to introduce Micah Valentine, a founder of Pinnacle Wealth Management right here in the upstate. At Sparrow Financial, we're dedicated to helping our members achieve their financial goals, and that's why we recommend the specialized guidance of our friends at Pinnacle Wealth. Micah brings a wealth of knowledge to the wealth management industry, and I absolutely love working with him. He has a genuine passion of guiding people towards their financial goals, and he keeps us informed on hot financial topics, which brings us to today. So, Micah, will you introduce our presenter?
Absolutely. Thank you guys, everybody, for being with us. We thank you for joining us. A very special topic and amazing presenter. So June is Long-Term Care Awareness Month, and we have a lot of partnerships with our business. And one of our partners, Liz Brooks with Bright House Financial, holds the CLTC designation for a Certified Long-Term Care Specialist. And she's an expert in the field. She's been doing this for quite some time, and we really rely on her and her expertise in this field. So I thought, what better person to present on this very, very important topic of care, as we're all having to deal with it in some form or fashion, most of us, or we will. So with that, I'll bring in Liz, and thank you so much for joining us today and being with us to share with us.
Awesome. Thanks, Micah. Thanks, Chelsea. I'm going to go ahead and share my screen here, so bear with me. As Micah mentioned, my name is Liz Brooks, and I am with Bright House Financial. I guess, Chelsea, Micah, can you see that okay as a slideshow view?
Yes, you are good.
Perfect. Okay. So if you're not familiar with Bright House Financial, we used to be MetLife. MetLife spun off the life insurance and annuity business to form Bright House about 7 years ago. And I've been with Bright House about 7 years and working with advisors like Micah to help clients in long-term care planning. If you don't take anything away from today, please take this piece. Long-term care planning is more than just an insurance conversation. We are going to talk a lot today about insurance, but there are different ways to plan for long-term care. And a big part of that conversation is, what do you want that to look like for yourself? I know it's a difficult conversation to think about your own mortality, but I'm the product of two grandmothers who did not have a long-term care plan. And unfortunately for them, they ended up in Medicaid facilities. So we'll touch on Medicaid a little bit later. That's one way to pay for care. But for my grandmothers, it limited where they could go and the type of care they could receive. And it was really difficult to watch that. Now I have my parents who are almost 80, who unfortunately are uninsurable. So we're having conversations around what they want that long-term care to look like. So that's outside of insurance. So again, if you, from today, talk to your family, talk to your spouses, talk to your financial partners on what you want that to look like, because there's different ways to plan for that. So moving on, for today's agenda, we're going to touch on what long-term care actually is. This is going to be more from an insurance perspective, how we view long-term care. We'll go over the popular types, the ways to pay for care, and then the costs associated with that. Depending on where you reside, the cost of care is different state by state, county by county, and then for the type of care you're receiving. So that's an important thing for us to know when we're talking about long-term care planning. And if you are looking at insurance as an option, there's two different types of insurance in the marketplace: traditional and hybrid. For those of you on the call that have maybe gone through a long-term care event with a family member, they probably had traditional long-term care. That was the first type of long-term care in the industry, and we've evolved to the hybrid contracts. So we'll touch on the differences there. If you have insurance, there's two ways you can access the benefits. There's indemnity and reimbursement. So we will touch on those differences. And then outside of insurance, there is plenty that you can do to plan for a long-term care event. And then we're going to wrap everything up with a case study. So what is long-term care? So when you're thinking about long-term care, I know a lot of people probably just think nursing home. There's a variety of care services that we'll touch on, but when we're thinking long-term care, this is something that you are likely not going to recover from. You likely need 90 days or more of care. It's likely something you're going to age in place with, and you're likely not to recover. Over 50% of the population, 65 and above, will have some form of a long-term care event. That number is actually closer to 70% right now. So if you're thinking about, the average population and you're looking at the baby boomer generation, 70% is a really high statistic when you're talking about a long-term care event. We don't know what that event looks like, but that's a high number of probability that we are going to have that. When it comes to types of care, there's a lot available. And when we're looking at the care side of things, we always refer to activities of daily living. So in the insurance world, in order to qualify and access benefits, we'll typically state that you cannot complete 2 out of 6 ADLs, or that you have a cognitive impairment, such as Alzheimer's or dementia. So if you're looking at the list here, I want you to think of your daily routine. So you get up out of bed in the morning without assistance that's transferring. You go to the bathroom, toileting. You take a shower, you get dressed, and then you eat. So every morning you're doing 5 of these activities. If you needed help with 2 of these, you would be able to access your long-term care benefits should you have a long-term care policy. And when it comes to the benefits and the care, I mentioned there's a lot available. So you probably are familiar with nursing homes and assisted living facilities. Home health care is a big one. A lot of folks prefer to age in place and to be in the comfort of their own home when that time comes. Respite care is becoming more popular. So for some of you on this call, maybe you have been a caregiver. It tends to be the oldest daughter that is the primary caregiver for maybe a parent or a spouse. Wives tend to take care of husbands, but they still have their own needs. So if they are a primary caregiver, what respite care does is it allows someone to come in for a few hours every week, and it allows that person to take care of things for themselves. So respite care is becoming more popular. But when you're thinking about long-term care services, hospice is also covered, adult daycare, you name it,
We froze up.
what would be covered under that contract. The next few slides are going to be some statistics around long-term care, and then we'll kind of get into the costs associated with a long-term care event. So it's probably no secret that we are living longer today, and women outlive men. There is a reason that in a nursing home population, 2/3 of that are women. So from a long-term care planning perspective, it is especially important for women to have this conversation. It does not rule out men, but it is especially important for us because statistically, we are more likely to have a long-term care event. Talking about care progression, 73% of long-term care events start at home. I mentioned that it's usually a spouse or the oldest daughter that is the primary caregiver. But for most folks, you want to stay at home as long as possible. And unfortunately, it gets to a point where you probably have to move into assisted living or nursing home care because 24-hour home health care is not feasible. I'll touch on that cost in a couple of slides. Unfortunately, we have a lot of folks that would prefer to stay at home forever. You get to a certain threshold where that cost is just not substantial or it's not feasible to maintain for a long period of time. Again, that's all part of that long-term care planning conversation. The average long-term care event is about $300,000. Now, this is the average. You know, in the instance of a cognitive impairment, you might be looking at double or triple this, and maybe you have a shorter duration where it's a lot less. The long and short of it is we don't know what that looks like. But if you're looking at the average, $300,000 is a lot of money. And this is outside of healthcare. So this is not factoring in prescriptions, doctor's visits, things of that nature. This is strictly long-term care expenses. So if you haven't prepared for this, where are you pulling from? Do you have the income to cover it? Do you have savings? Are you having to sell off your investments? How are you going to pay for that type of care? And when it comes to paying for the care, I love breaking this down to a monthly cost. This is not meant to scare you. This is meant to be educational, because unless you've gone through a long-term care event, you probably don't know what this monthly breakdown is. When you're looking at a monthly cost for 40 hours of a home health aide, you're looking at about $4,300 a month. Now, that is the average nationally. I mentioned 24-hour home health care. If you want 24-hour home health care, and I do know folks that are doing this, it is on average today about $15,000 to $20,000 a month for 24-hour home health care. That is an unrealistic number to be able to afford. And so that's where, when we talk about progression of care, you get to a point where you have to go into a nursing home facility where that cost is significantly lower. Either way you look at this, if you think about your mortgage, your car payment, this monthly cost is substantial. If you have not prepared for this, this could really be detrimental to a financial plan. And that's the key here. We want to have this be a part of a financial plan and a planning conversation around, if this happens to me, where am I going from? Where am I going to pull from? And that's where maybe insurance is going to be an option. So how do we pay for care? I touched on Medicaid with my grandmothers. So for Medicaid, in order to qualify for Medicaid, you do have to qualify for it. And in order to qualify, you have to spend down your assets to a certain threshold, and then you have to have a low income threshold. So this varies state by state. But for Medicaid, if you have a phenomenal pension or high Social Security, that might put you above that threshold. So Medicaid might not even be an option for you. But for most folks, Medicaid ends up being a last resort, because you don't want to have to spend down your assets. So there are ways to avoid that with estate planning. There are estate planning attorneys that specialize in that. So that's something that you can do to plan for that. With Medicare, I want you to think maybe 90 to 120 days of coverage. It is not meant to cover a true long-term care event. And with Medicare, there's a lot of red tape around what qualifies for that type of benefit. Traditional long-term care and hybrid long-term care are the two types of insurance in the marketplace. We are going to touch on that on the next slide, so I'm going to skip over that. Family. So I mentioned spouse and oldest daughter tend to be caregivers. Family is an option when it comes to long-term care. But if you are having a family member as a primary caregiver, I urge you to think about respite care, because there are financial, emotional, and physical impacts to caregivers over time, that by allowing them to go have their own time and someone else be a caregiver for a little bit, it's very helpful. And then there's self-funding. So all this means is that we're planning to pay for our long-term care out of pocket. 90% of the population is self-funding, whether that is by choice or by default. When you think about self-funding, 70% over 65 are going to have some form of a long-term care event, yet 90% of the population doesn't have insurance. You're forced to insure your cars, your homes, but the statistics of needing to use that are very low compared to long-term care. So when it comes to self-funding, maybe there's a better option, and that's going to be the insurance route. So when you're thinking about insurance, as I mentioned earlier, traditional long-term care was the first type of insurance in the marketplace. So with that, and some of you are maybe familiar with this, you paid it like your car insurance. So you pay your premium every year, you have a given amount of coverage, your premium can increase over time. And then from there, if you have a long-term care need, you have the coverage. But if not, those premiums are gone. There's no other benefits with traditional long-term care. This is still available in the marketplace. So there is an option. It's usually Mutual of Omaha as the company, is really the only one that I see available in the marketplace today. What we've migrated to is something called hybrid insurance. So with hybrid insurance, first and foremost, it is a long-term care contract. But if you never need it, it operates like life insurance. There is a death benefit to your beneficiaries. And then there's also something called cash surrender value. So if I buy a contract and I don't want it 20 years from now, I can get some money back. The premiums on a hybrid contract are guaranteed. They cannot increase, and you will choose your duration. So with hybrid, you can do anytime, anywhere from a one-time pay-in up to 10, 15, 20 years. You choose the structure, but know that your premiums are guaranteed. With both options, there's two ways to access the benefits: indemnity and reimbursement. Traditional contracts tend to be reimbursement, and hybrid could be either reimbursement or indemnity. So what are the differences there? So think about how to qualify for care. Your doctor will sign off on the 2 out of 6 activities of daily living that we talked about earlier, or a cognitive impairment, such as Alzheimer's or dementia. And if you have a cash indemnity contract, your doctor signs off, you qualify. There's likely something called an elimination period. Typically, it's 90 days. So for the first 90 days, you cannot access the benefits. But come day 91, the insurance company will then write you a check for whatever your monthly benefit is. So you receive that every month as a tax-free benefit. One thing I haven't touched on, all long-term care insurance provides tax-deferred growth and tax-free benefits on the back end, whether it's for the long-term care or for the life insurance component if you have a hybrid. That is a nice benefit there. With reimbursement contracts, so same qualifiers, you may or may not have an elimination period, but basically, if I qualify for care, I'm going to pay for my care out of pocket. I'm going to submit receipts to the insurance company every month, and I'm going to hope that they approve it and pay me back. The difference here, if you have a long-term care benefit of $5,000 available to you, and you're only spending $3,000 on a home health aid, reimbursement will only pay you the $3,000. That $2,000 differential gets tacked on to the end of the contract where you may or may not use it. With indemnity, you will get the full $5,000 to spend as needed on your care. The insurance company does not have to approve specifically where those dollars are going. So you get a little more flexibility and choice in what that care looks like with an indemnity style contract. Outside of insurance, there's a few things that you can do to plan for this. And this is something that I went through with my parents over the last few years. So I mentioned an estate planning attorney when it comes to Medicaid planning. An estate planning attorney will also help with these documents. So my parents have each other listed as their power of attorney, and I am the backup. So if my parents cannot make financial decisions for themselves, they have appointed each other and then me, someone they trust, to manage the finances for them. I'm sure Micah will agree that as a financial advisor, power of attorney is huge.
Very
You want
much.
you want that document on file with your banking institution, with your financial advisor. You want that done before you actually need it. The last thing that you want to do is have to make an emotional decision on who's doing all of that for you. So planning ahead is very important. Healthcare surrogate. My older sister is a nurse practitioner. So my parents have each other as their healthcare proxy, and then my sister. So if they cannot make medical decisions for themselves, she can do that. We've also asked our parents to write down their wishes. That is something that you want to do. Is it a DNR? There's a lot of planning that goes into the healthcare medical side of this too. In putting these documents together, it gives you peace of mind, it gives your family peace of mind, it gives your financial advisor peace of mind that you have this in place so that when the time comes, you're not making rash decisions and scrambling to get everything in order. We're going to wrap everything up here with a case study. This is a case study. I went through this with both my grandmothers. So my grandmothers had longevity and they ended up being in facilities for 5 to 6 years. That's a little bit long, but again, every situation is different. In this case study, we have a 60-year-old female who wants to plan for what her mom went through. And that was 4 years of assisted living and 2 years of a nursing home. So what we're doing in this case study is we are going to project out that cost of care 20 years from now. This is something to think about because I have a lot of folks that say, well, I can afford a long-term care event if you're looking at maybe that $4,000 to $7,000 a month today. But if you're 60, the likelihood of you needing care now is very slim. You're likely to need it 20 years down the road. So if we do a 3% inflation, what does that cost look like? And when we factor that into this, 20 years down the road on an annual basis, your assisted living cost is about $100,000 a year. And your nursing home is almost $200,000 a year. So that total long-term care risk is almost $800,000. That is a lot to plan for. That is a lot of money if you haven't planned for it. And so what this client wants to do is put away today to save for that. And what we did here, we said, okay, if the client needs to put money away today and invest it and earn on average 6% every year, she would need to put away $655,000 today to save for that long-term care event. And this is where the insurance conversation comes in. Insurance, especially hybrid contracts, are a great way to leverage the money that you have to offset this risk so that you don't have to put away that much. So I hope today you found informational. This is the end of the presentation. So I will stop sharing my screen and we can open it up for questions. But I think when it comes to long-term care planning, this is something that all of us need to be considering. It is insurance. So there's a health aspect, right? You have to be healthy enough to qualify. There's different options available in the marketplace. And there's different ways to structure the contract. So it really is a way to tailor these types of policies to you specifically. I'm one of many carriers available.
Thank you again for joining us. And thank you again, Liz, for sharing all of that information. Definitely some conversations to have in our future. Keep an eye out for any future webinars from us. And if you have any questions that pop up after this webinar ends, feel free to respond to the email that I sent out reminding you of today's webinar, and I'll make sure I get you connected with Micah to answer those questions. Thank you all.
Thank you. Thank you, guys. Thanks, Liz.
Thanks, everyone. Have a good one.